Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, May 30th. It is one day after Memorial Day. It is I believe, the final day of the month. Do we have one more? No, we have one more day of the month tomorrow, and then the new month in June begins on Thursday. So tomorrow will be, monthly close. We obviously had the weekly close yesterday, but monthly close will definitely be interesting to see how that shakes up. The classic, sell in May and go away. Well, how is that going to play into June? Because we've had, quite a topsy turvy May, and mainly that has a lot to do with this trajectory by the dollar. The dollar has from since this the May 1st, it was up here, but dipped down to the 101 level, May 3rd, 4th, 5th, and 6th, and then pretty much just jumped all the way up to mid 104s. And we did sell off a little bit last Friday, like we expected, but holding strong over the weekend. And well, I guess actually when we kind of called that out on Monday. I'm sorry, not Friday, but it is obviously stalling at the 104 level, which is something we discussed Friday. And then Monday's report to the TTC community, we expected it to pull back and have a little bit of bullishness on Monday, which we did. If you long the lows Monday, definitely had a pretty decent day, but very flat, topsy-turvy day for most assets. And that is because, in my opinion, dollar sold off and then dollars coming back. So now we're just sitting in this range. We know when we're just sitting in this range, it can really cause some indecision. So basically what we want to see is the dollar come down to, mid 103s. And if that is the case, then, risk should have a bit better time. And of course, if it continues to move higher, if it breaks above that 104.5 level, then it's probably going to start creeping up towards 105 or higher, which would be likely to risk's detriment. So we'll keep a close eye on this, but definitely want to continue to see the dollar stall at this level. We would like to see it kind of pull back very similarly to what we saw in March. So moving forward, looking at equities, we can see that, debt ceiling news obviously lifted us higher. Sunday, we had a gap up, pretty much closed that gap over the weekend, had a bit of a boost Tuesday night, and then really sold that off. And now it's important to consider that tomorrow the debt ceiling deal will likely be voted on. So if the vote goes through in the House, then it's looking very likely in the Senate. And if it goes to the House, then you'll probably see some more euphoria come in, very similarly to the debt deal being reached over the weekend. Big jump. So if we get that on Wednesday, would expect to see another jump. But of course, we still have several hours, 24 hours, more or less until Wednesday session. So support right now is sitting at the 4,200 level, 4,198, however you want to call it. If we break through that level, obviously going to drop. I'd say support is going to come around 4,180, at worst 4,170. If we can hold this level, then we'll probably end up heading back up to 42.15. So let's draw some new lines, considering we did obviously get this dip right here. Look where we're holding, 41.98. So if we can get back above 41.98, do something like that, then we'll be at 42.16, get above 42.16. Now you're at the local highs, which obviously got swept overnight and then sold off. Get above that, and then you can start talking all the way up to the 42.60 level. And then if we break down here, then you want 41.70 to hold and to get back up here for then potential rejection or a reclaim like that. So equity is definitely looking a little sketchy. Double top right here, sweep the highs, dip down, deviate back into the range. Definitely not what you want to see if you are bullish equities, but you can definitely still hold 4,200 and survive. You can even hold 41.70 and survive, but break through that, things get a little precarious because then you start digging back into this really ugly area, and that's not what anybody wants. We definitely want to stay above this area right here. So I have a feeling that you'll probably see, some volatility in relation to this probably tomorrow if the debt ceiling deal is passed in the House. And if not, then you'll probably see some bearishness as traders price in a lack of a deal on time. So looking at Bitcoin, let's go ahead and zoom out to the 1 hour, staring at the 15 minutes. And I don't know why we have all this still down here. Yuck, yuck, yuck. Let's get rid of all this. Don't distract us. Okay, so obviously, Sunday or Saturday into Sunday, boost because the debt ceiling news. We swept the 28.3 level, which just to zoom out and give you a bit better of a perspective. Actually, I don't know why it changes. I hate the fact that it does this. It for some reason changes the lines based on my time frame, and I have not been able to figure out why. But the reason for the 28.3 mid 28.3 level equal highs with the 10th of May. There's a nice little, stop right there. And then we have this range, all the way through here. And then we obviously broke above the range. And now, we swept those highs. And very similarly to equities, it's ETH. Very similarly to equities, swept the highs, and then dip lower. So that's common trade. So something to continue to look for. It's also very similarly down here, sweep the lows, move higher. So always something to watch for in terms of equal highs, equal lows. But now that we move back into where we are now, moral of the story is, we are very early in the morning, down here. Hold the mid or kind of 27.5 level, get back above 27.7. Then you can start talking about 28, and of course get above 28. Then you can start talking about 28.3. If we get up to 28, equal highs, potentially get rejected back down to 27.5. And of course, we lose 27.5. I would expect 27.3 to act as support first, 27.2, 27.3. Then if you break below that, then you're probably going to head down to 26.5 yet again, which is pretty much where we were prior to the debt ceiling deal being released. So no real read for Bitcoin yet, but again, equal lows. Definitely want, if we can get this held, get back above the 27.7 level, then I'm probably looking for longs. You could probably start entering longs here with your stop, probably at, just below 27.5. Pretty obvious trade. You've got these lows here. So if you're entering here, you're basically putting your stop just below those lows. And, in case we sweep the lows and then move higher. So that's definitely a potential option. If you wanted to be safer, wait for the break above 27.7 and then enter, which is definitely the safer option. Because if you enter here, you still get stopped out. But then again, you could enter the trade a little bit earlier than everybody else. And then, of course, if we break below 27.5 or, convincingly below those lows, I'd probably wait for this wick right here, which is just below 27.5. Then we'll short and we'll get down to 27.3, 27.2. And then, hopefully long on the 1 hour estimated 200 moving average, or then you break down and move lower. So looking at ETH, it's going to be very similar, but should note, ETH BTC has been moving pretty well, some really wild volatility over the weekend with that one big boost from Bitcoin, but, still on that bullish trajectory. That's basically just a deviation, and we are, don't want that deviation, and then we are up here. So basically you want to see something like that, and ETH may be moving stronger than Bitcoin, but alternatively equal highs could get rejected off. So I wouldn't long Ethereum heavier than Bitcoin until we can get above that level and do something like that. So back to the ETH chart, zoom in on the 1 hour. I still don't know why. I'm pretty sure I deleted these. It's some crazy stuff going on with my charts. So for ETH, moral of the story is, hovering right around the weekly VWAP, sitting in between the VWAP bands, very good for trading right there. If we can get above the VWAP, then we can start to target this level right here, 1915, possibly all the way up to equal highs, right around 1925. Let's move that. Get above these highs, then you can start talking all the way up to 1960, 1970, and obviously you can potentially get rejected at these equal highs, very similarly to equities. So watch out for that. And obviously, if we fail at this VWAP, this was more or less the important number down here, due to the daily close right here, but basically break below daily close, break below the VWAP and break below the daily close. Probably going to head down to 1875, lose 1875, head down here to this range right here. Also coincides with the 1 hour estimated 200 moving average. So possible long target there, rejection right here, or acceptance. But, I wouldn't start worrying about that just yet. I will say, things do look pretty decent at this VWAP, but we need to see this VWAP hold. It's definitely two wicks, two. This is definitely a formation I want to see, but I want to see the hourly close like this. There's still 25 minutes left, so it's definitely still some time for the hourly. But basically, what we want to see is, what is this? We'll sync. Maybe that's something I gotta figure out. Okay, sorry, got distracted there. So above the VWAP, we want a long, and we'll target, first target be 1915, second target be 1925. Look, moving higher, we definitely want to see that close above the VWAP, and then you get above the 1925 level, and you'll flip that level and move higher. And of course, if we close below the VWAP, first target 1892, then break below 1892, then we target down here. And if we lose this, we target here first, and then we target here first. So there is your crypto update. We could definitely see green candles into tomorrow with the debt ceiling announcement. That is very much plausible. But I would recommend remaining patient, because Congress is not the most, well, I don't want to disrespect anybody too bad, but we all have our feelings about Congress, and they are rooted in historical means. So I would definitely, don't count your chickens before they hatch. And I would definitely recommend to keep a close eye out for news in relation to the debt ceiling tomorrow. It could come at any time. And of course, if the resolution is passed as it stands right now, probably see more green candles. If it fails or is not passed, or some sort of disagreement arises, probably see more bearish candles. And then final note is, we do have, in addition, of course, to this debt ceiling nonsense, tomorrow we have ADP employment numbers, which are projected to come in a lot lower than the previous month. And then we also have jobless claims on Thursday, and ISM manufacturing numbers, as well as the U.S. employment report and the unemployment rate, as well as the ever important hourly wages that I like to very much pay close attention to, that I think a lot of people overlook, because if hourly wages continue to increase, doesn't bode well for inflation data. So unemployment expected to tick up, hourly wages expected to tick down, and employment numbers expected to tick down as well. This is what the Fed wants to see. Remember, they want to see less employment numbers. They want to see higher unemployment numbers. That will help decrease inflation, and will decrease the likelihood of a 25 basis point hike in the next FOMC meeting, which I believe is around a 60 to 65% chance, which means it's more likely than not. So if we get bad employment data and good unemployment data, and I hate saying it like that, because we do want more people in. We do want more people in jobs, but unfortunately for this inflation situation, for markets to move higher, we want the inverse for our stocks and crypto to move higher. So we want unemployment to tick higher. We want employment to tick lower. If that is the case, markets will likely move higher. But of course, we still have this debt ceiling stuff moved around. So even if this is the numbers we want for bullish markets, if no debt ceiling deal is reached, that could, completely ruin the party and ruin the fun. So which is why it's very close to pay and very important to pay attention to what's going on in Congress, as well as what's going on in the unemployment world. So my suggestion to everybody, again, remain patient, don't overextend yourself. But I do have a feeling that things will continue bullish throughout this week. May is over. I have a feeling you'll see some people step in, as long as the debt ceiling deal and employment data comes in. As long as the debt ceiling deal comes in and employment data is proving to show higher unemployment, then I think markets will continue higher. So that is my estimate. So good luck. Happy trading. See everybody tomorrow, of course. And again, if you're not in the Trade the Chain community, you're missing out on multiple trade calls a day. We've been absolutely killing it. Pretty much everything I go over and more on this show. This show is just follow-ups. All the good, juicy trade ideas are in the morning. We know plenty of good setups are in the morning, and of course at the daily close. So we'll of course be updating the TTC community with more stuff later in the afternoon, and of course every single day like I do. So good luck. Happy trading. See everybody soon.